Achieving financial success takes dedication, discipline, and most importantly, a plan. For over 30 years, Don Reynolds has helped savers define their needs, formulate their plans, and achieve their goals. From accumulation to preservation and protection, and through the income distribution phase in retirement, implementing the right strategies makes all the difference. Your retirement is our business. Welcome to Strategic Asset Preservation.
Well, hello, everybody, and welcome again to another episode of Reynolds Wrap. I'm Don Reynolds, of course. And
Corey Silp, good day, everyone.
So it's nice to see everybody again. We hope you've been enjoying the show.
Absolutely.
Today, we're going to talk about income planning. And I think we maybe, talked some about this in the past, but we think today, now in our current environment, that it's probably more important than it's ever been to make sure you've got a income, plan for retirement.
Absolutely.
We talk about pensions in the past where, pensions, kind of the exception, not the rule anymore. There's not many companies that offer a pension. You have to create your own pension. You've heard us talk about pensionizing your IRA. It's something we can talk about in a personal situation for you to explain in more detail what that means. But I think at the end of the day, it's really about making sure that you do have some kind of a plan for income.
Absolutely. Absolutely. I mean, that's when you retire, you take away your W-2 or your 1099 or the income that you've got when you were working. So absolutely, once you click that button, so to speak, you jump off the ledge, you get into retirement. Something's got to come into the checking account every month to pay the bills and hit the wish list and do the things you want to in retirement. Right. And that is income. So whether it be Social Security that I know we've talked about at great lengths, or whether it be a combination of a pension if you did still have one at work, or it's a combination of those two aligned with the retirement savings that you have. How do you draw income from your savings? And that's really what we want to talk about today is you've got your investment accounts. Maybe it's a 401k. Maybe you've rolled it into a traditional IRA, or you've done a SEP or a simple IRA, or you've got a Roth IRA or a non-qualified. How do you take those dollars and guarantee that you've got the income from those dollars to not only last your lifetime, but also handle the wish list items, the budget items, and inflation? I know that's been a hot topic. And one of the things that we're seeing today with the rising interest rates because of inflation, it's very important to understand that we make sure we're getting good returns on those safe dollars or our income planning. Now, I'll let Don talk a little bit about some of these savings, 401ks, traditional IRAs. How do we draw income from them? And what do we do as far as percentages in drawing those incomes?
Right. So, you've heard us talk about this in years past. There's a 4% withdrawal rate rule. Yep. Bill Bengen is the guy who created that.
Yep.
And then maybe it was 10 years after he came out, they said, don't do it because interest rates were so low that it wouldn't work. You'd had a 90% chance of failure. Well, now we've gone, the opposite direction again, I guess, if you will, full spectrum. And now interest rates are back up and chances are you could be all right with that. But, we have to think about these other things in retirement, taxation, inflation. So when you look at a retirement plan and you have income, that's the biggest thing with a lot of pensions that are out there today is they don't really increase. Mm-hmm. So over time, you're falling behind with purchasing power. So we want to create some kind of an income where we have potential growth on that income benefit over your lifetime. That's going to help you keep up with inflation. It's going to help you to keep all the taxes because you're going to get more income. It means you might have more taxes, but you're going to have more income to pay the taxes.
Well, it's no different when you're working. You probably wouldn't have stayed at your current employer or your past employer you retired from if you didn't have any increases in your income for the past 15 years, 10 years, 20 years. We look forward to those adjustments in our income, and if you're working for a government position, those are attained or negotiated, or perhaps through your corporation, or again, if it's 1099, you would make sure that your business was going to create more income because you needed more as you went through the years of life. No different in retirement, folks. You need to make sure that your income is rising. And again, as Don mentioned, many pensions don't keep up with the cost of living, and Social Security, the COLAs, the cost of living adjustments often don't keep up with inflation. So you need to look to your investments, maybe look to dividends, good dividend paying account, maybe look to some type of income plan that's going to have the ability to have that rising income. But that is very important. What I often say to people is, what does ROI stand for? Most often people will respond with return on investment. But when you get into retirement, ROI should stand for reliability of income, folks. Yep. And again, that's what we're talking about, is taking your savings, taking your retirement accounts and turning them into income. And again, if this is a subject that you wanted to dive into for your personal situation, please give us a call. We'd be honored to show you perhaps where are you falling short on some paychecks in retirement, and how do you take your savings accounts and align them with Social Security and a pension that you may or may not have to make sure you've got enough paychecks coming in to your accounts to take care of your budgets. Yeah. And then we can talk about play checks after that.
That's what I was going to say. Don't forget the play checks, because we all want to do that.
Absolutely. But give us that call, 651-773-3859. Again, 651-773-3859. We'd be honored to go through this with you on an individual basis.
Yeah, for sure. One thing I'll add to that too is that when it comes to income, and anybody who comes to our office, one of the first things in our discovery meeting that we offer, which is no cost, no obligation for folks, they have to have a budget. Okay, you have to know what your budget's going to be in retirement. How do you retire when you don't know how much money you're going to need?
True.
That's called defining your income needs. A lot of plans out there today will focus on like lump sum. Or, what kind of returns am I going to get? That will decipher how much income I'm going to have. I believe, I think, I hope that's not for us at all. We are going to have certainty with our income plans we develop for our clients. So we know that no matter what comes, you're still going to have that guaranteed paycheck. You've maybe heard us talk about this in the past. They say that people who have pensions are the wealthiest people in America. And the reason that is because they get that guaranteed check coming like clockwork every month. So they don't have to worry about other assets. And that's all we're really talking about, is creating some form of income like that for you as well. So with that, again, please give us a call at 651-773-3859. We'd be happy to talk to you about your situation and see what kind of income do you need.
Absolutely.
So with that, I want to thank you again for your time, folks. Look forward to seeing you all next time.
Have a great day, folks.
Listen to more with Don Reynolds and Corey Stilton on the Strategic Asset Preservation Podcast by visiting 800preserve.com.
The information presented on this program is provided for informational purposes only, without warranty of accuracy, completeness, or suitability for a particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature and not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs. Early withdrawals may subject the owner to penalties, fees, or taxes.
Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a quarterly fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.
Advisory services offered through Brookstone Capital Management, a registered investment advisor.